Okay, good morning. Welcome back to another episode of Who Charted. I am Dan Russo, Co-CIO here at Potomac. Hope everybody had a great weekend. And if you are in the Northeast, hopefully you are hunkered down and not doing much of anything today, but you will be digging out probably later. My understanding is there's about 1.5 feet of snow up there, at least what I can tell from the cameras on my house. Anyway, we are going to dive right into it. And truthfully, I wish there was more to say. I wish there was more going on. I wish there were more changes happening under the surface of the market to some of the themes that we've been discussing. But that's not the case, and the market doesn't really care what I wish. The market doesn't care what I want, and that's a good lesson, a good rule of thumb for everybody. What you think should happen, what you want to happen, the market does not care, nor should it. Right? Turning our attention now, as we do to start out, we have the NASDAQ 100 and the S&P 500 and their respective 60-week moving averages, and utter boredom, okay? Nothing has changed here. These sideways consolidations have been in place since the end of October. Now, this is kind of interesting. It's something, when you hear people talk about the market needs to correct or the market is in a correction, right, we take that to mean a price correction. Right? The price collapses from some sort of high, maybe down 10%, down 20% is a bear market, right? But I think people forget that markets can correct through time, right? And maybe that's what's playing out here. Now, it doesn't really matter one way or the other. I would actually argue that what's happening now is more frustrating because of some of the underlying signals beneath the surface. But remember, we had that big sell-off into the Liberation Day lows in April of last year. Now, in fairness, the market started rolling over in February, right, and kind of capitulated into that April news. And then we had a monster rally, right? Both of these major indices rally hard into those October highs. Now we're going sideways, okay? 4 months of a consolidation. I don't know how long it should be. I mean, like I said, I think it's frustrating because of the underlying signals that we've discussed. But I think it's an opportunity to recognize that there's more to the market than the S&P 500 and the NASDAQ 100. We have showed you things like the transports. We have showed you Europe. We have showed you rest of the world. We're not going to rehash all of that today. Today is kind of going to be short and sweet. We're in a sideways consolidation. Perhaps it's a correction through time. I understand that it can be frustrating, believe me, but the market, again, does not care that you, me, or anyone else might be frustrated, right? If we kind of look at what's playing out under the surface, this is why it's so frustrating, right? This is the NYSE advanced decline line breaking to new highs above a rising 43-week moving average. Now, we've had this chart here before. This is one of the key legs to the stool that we look at when we analyze markets here at Potomac, right? What is the trend? Up, down, sideways. Well, arguably past 4 months, sideways. However, what is the health of the trend? Well, underneath the surface, things are healthy, right? We've talked about this over and over again. More stocks going up than going down is bullish. That is a healthy environment. What's happening is the largest stocks are not participating. Right? So remember when everybody was concerned that it was only the Mag 7, we've showed you Mag 7 charts here a few times. It was only the Mag 7 or only the top 10 weights in the S&P doing all the heavy lifting, and that was unhealthy. Well, here's what happens when you get the opposite. Right? When you get the other 493 working, when you get the other 490 working, pick your number, you get a AD line that looks like this, perfectly healthy, right? Bulls get super excited, check one off, right, as they go through their checklist, but it's not enough. Those Mag 7 stocks, those top 10 weights are the top 10 weights for a reason, right? They are the superstars, right? They are your best players. And when they're not performing, it's really, really hard for all of the little role players in the market to pick up the slack. Now, they're trying, believe me, they're trying hard, and this is great, because if those leaders get into gear just a little, market probably rips higher. Now, we're not there yet. We're not seeing it yet. However, this is what has the bulls excited, right? If the bulls want to make a case, they can make a case that breadth is really good under the surface of the market and that the market is healthy, right? They will also point to the fact that new highs have been, pretty solid throughout most of 2026. Now, we have also pointed out something different. We've pointed out that the lows have also been picking up for most of 2026. And this is where some nuance comes in, right? And this is where things become a little bit interesting. So let's erase this for a second. Okay, this is where things become a little bit interesting. Why do they become interesting? Because this is not something you normally see, right? This is not something that you would expect to see in a strong bull market, right? In a strong bull market, we expect to see more stocks going up than going down. We are seeing that. In a strong bull market, however, we also expect to see more new highs than new lows. We are seeing that, but the fact that we're seeing an uptick in new lows is kind of interesting. It's slightly nuanced. There's actually an indicator out there for the real market nerds. You'll know this, but there is an indicator out there called the High-Low Logic Index. It's in a book called Stock Market Logic from Norman Fossbeck. If you can find it, certainly pick it up if that's your thing. I actually have a regular copy of it sitting on a bookshelf somewhere. But it argues that a healthy market should not have a lot of new highs and a lot of new lows, right? A healthy uptrend should have a lot of new highs, very few new lows. A healthy downtrend, so to speak, should have a lot of new lows, but not a lot of new highs, right? We're seeing a fair amount of new highs and a fair amount of new lows. So somebody like Fossbeck argues that that might mean something is off under the surface of the market. Now, I'm not making that call. I just think that this is interesting and no one's really talking about it. But aside from that, let's get to the fact that really nothing's changed. All right, S&P 500, NASDAQ 100, sideways consolidations. Rest of world is still working, right? We can redundantly pull up those charts another time. Mag 7 stocks are still under pressure on a relative basis, but yeah, there's something for everybody in this market. And as such, nothing's happening, right? The bulls can make a case, the bears can make a case. Meanwhile, we sit here and go sideways. So to me, this speaks to just kind of stick to your process, as we will do. Let the weight of the evidence dictate what to do next. And until that happens, I guess if you're in the Northeast, enjoy the winter weather. And if you're everywhere else, enjoy the fact that it's probably starting to get warmer. Thanks for taking the time to listen to what we have to say. And I will be back with you next week.